Hey everyone, it's Luran here and welcome back to my channel. Guys, in today's video I'll be looking to cover 4 stocks that are prime and ready for takeoff. So if you're someone that is trading options or stocks, equity stocks, you certainly don't want to miss this video because these stocks are ready to take off, as I mentioned, either today or early next week. Now I'm looking to get some starter positions on these stocks today. I did trade Tesla last week, made a decent profit, but I'm looking to get going again on Tesla because it's sitting right now at some key levels. And like I said, it's ready for takeoff. There's some great news on these stocks as well, going for them on the positive side, fundamentally. And also technically the charts are, like I said, prime and ready for takeoff. So without further ado, let's jump right into the charts, guys, where I break it down, show you exactly. I'll try to make this video as short as possible, to the point, so you guys can see exactly what I'm talking about. No fluff, so you can, if you're someone that is trading options or stocks and you want to, play along with me, feel free to do so. Remember to do your own due diligence before you invest your money, but you guys know my track record and you'll see exactly where I'm looking to enter, exit, my risk management and everything like that. So let's jump right into it. So the first one is Tesla, guys. So right now you can see Tesla is in a perfect triangle formation or wedge formation. We can see 1, 2, 3, 4, 4 connection points on the resistance line. And you can see earlier this week Tesla decided to make some higher highs and higher lows and broke above. You see yesterday there, Tesla broke above that resistance line and closed right on the resistance line, didn't close below that line. Now if Tesla comes below this line, then we know it's a breakdown and it's a false breakout, but that's not what we have here. We have one day, which is yesterday, the 24th of June, Tesla sat and held on top of that. It used to be resistance, as you can see here in those 5 attempts. Now it's support. So all resistance become new support. That's one of the most fundamental processes in trading. So we have one, and then we have today, which is the 25th of June. Tesla is sitting on that old resistance, new support here again. And you can see here, look at the precision in which Tesla is connected with that support line. So if it closes the day and Tesla doesn't break down forward into this room here, break this line, then it's a no-brainer, guys, that Tesla will move higher. So definitely the next target for Tesla will be at upward 760. That's about 13%. And then the next stop, obviously, it's back to test all-time highs of 880, which is 30%. So you have 16% and you have 30% on Tesla. That's if you're trading just the plain stock itself and you're not doing any options. But you can do some options here. You can buy a 2-week option to fill this gap. There's a gap right here at 740 to be filled. You'll get that by next week. By next Friday, that gap is filled. Believe me on that. So yeah, like I said, you can do stocks, get it up to 760, 765, and you can take partial profit, and then you can hold it as it gets up to all-time highs again. So Tesla is bullish right now. Like I said, there's some great news that came out over the past couple of days. Tesla to share supercharger network with other automakers in 2022. This means that there's huge revenue for Tesla because this company has tons of supercharging stations all over the world. And if other EV makers start to use these supercharging stations, what will happen is Tesla will profit significantly from this because, one, they'll be able to charge more. If you're not a Tesla car you're charging, they'll probably have a higher rate for charging, and they'll make tons of money on this initiative. So that's huge for Tesla. And some of the other things too is you can see Biden, he backs the 1.2 trillion infrastructure bill put in place places big conditions. So there's a bipartisan support by Biden to move forward with this infrastructure bill. I think it's less than $1 trillion. I think it's about 900+ billion, and there's hundreds of billions of dollars for EV for charging stations and just EV development as a whole. So Tesla and other EV makers will benefit from this infrastructure bill. There's some other news which I won't get into for Tesla, but right now let's focus on the charts. And I showed you guys the key two fundamental drivers, the charging stations that will be opening up, and then Biden infrastructure plan that includes tons of investment for EV. So that's it, guys. That's the fundamental, that's the technical. Tesla is sitting high and pretty right now. It's ready for launch, it's ready for takeoff. Now investors will be starting to pump money into this stock as it rises higher. So you don't want to miss that, guys. Now let's talk about risks. We just talked about entry, and we talked about some price target levels. We can't finish this analysis without talking about the risks. Now the risk, guys, is this simple. It's not complex. Your risk is very simple. This line that we have right now, this is your risk line. If Tesla should break this line and close below this line, you want to get out of whatever position you're in, whether it's options, whether it's stocks, whether you're long stocks, you want to get out. That's your risk line. And you don't have to lose a lot in terms of what you're risking, because you're buying like literally on the support line you're buying. So if this thing should break below here and closes below here, so we're looking at the daily candle, it has to close, you exit. You might exit with a 1 or 2% loss, but that's okay. That's the price you have to pay to see if this trade will work out for you. That's trading, guys. That's part of it's like running a business. That's your expense, right? You have to buy stationery, supplies, pay your employees. In trading, your expenses is basically your losses that you take for putting on a trade to see whether it'll work or not. Now your risk reward, you have a high risk reward ratio here where your risk is very low, because if this breaks down, like I said, 2-3% max, it closes there, you get out. But the upside is 15% and then 30+%. So that's a ridiculous risk to reward ratio that you want to certainly participate in that scenario. So that's it for Tesla, guys. And then we have Romeo Power. So this is a company that will benefit. I won't get into some of the fundamentals, but this is more or less like sympathy plays, because these companies aren't profitable just yet, right? As you can see here, they're still, actually this one is profitable, 81 million, but this is the auto parts for electrical vehicles. And this company has, look at the short float, guys, 25, almost 26% short float. That's ridiculous. So what we can have here is a short squeeze. You guys know all the commotion around, AMC and GME, GameStop. Those stocks were going to the moon because they have high short interest, meaning the short float was over 20%. This one is 25%. And it has a low float, which is under 1 million shares float. So what means that this stock can experience a short squeeze, meaning the shorts, the people that are short in this stock can be squeezed, and this stock can push to the moon, basically. Now this stock is prime and ready to break out. It's in a wedge formation. It's tested the primary level here, and it's ready to break out. So you can buy stocks here again, or you can buy options. Price target levels for this one, I would say, would be 10, and this other level of 14 would be the next level. Those are the levels that I'm targeting. And in terms of percentage, we're looking at 24%. If it goes to 10 plus, and it goes to 14, we're looking at about 60%. That's nice profit, guys. And this stock will move because Tesla and other top EV companies are moving. So this company will just automatically just move with those EV stocks. So this is another top play that I'm looking to put a position on starting today. As you can see here, this is the wedge. There's no more room in the wedge for this to go. So any opening on the outside here, it's time for it to rocket higher within the next week or two. So you don't want to wait any longer. I'm not waiting any longer to get into this one. Now your risk level on this one, guys, I showed you your entry, I showed you your price target levels, and your risks. Obviously we have to look at the risk. The risk is this simple, guys. Your risk is this line, this support line. If anything should open below this line, you want to get out, you want to walk away, because this is the support line, and if it opens below, means that it's failing and going lower. You don't want any part of that. I don't even want to short it, because this stock is already down tremendously already for the past 137 days. This stock is down 83%. And that's another reason why this stock is primed to move higher, because it's oversold. And once it's oversold, investors will come and buy this at a discount. It's at a discount right now, so investors will come and they'll buy this up to push it a little higher. So this one is a big one, guys. Like I said, we have 10 and 14. This can go much higher, but I'm a little conservative in the way I trade. So those are the two levels. And we can expect a short squeeze in this one, similar to GME and also AMC that you guys have seen over the past few months. Look out for this one, Romeo Power. The next one we have is FCell. This one again is another wedge formation here, ready, prime. There's about 2 to 3 days remaining in the formation here before this one takes off. We have a gap to fill above. This one is a fuel cell technology. Obviously, it'll have a sympathy play based on EV going higher overall and the overall investment into the EV sector. So this definitely FCell will benefit tremendously. This stock is also oversold. You can see here in the past 138 days, this stock has been sold off for 70%. So this is definitely an oversold for FCell. So FCell, let's look at the short interest. This one has a 14% short float, which is not bad, but it's still up there, and has a short float of, shares float about 309 million, which is a little higher. So this one is definitely a nice play as well. In terms of price target, we're looking to target that 12 level, which will give you 35%, and the other ultimate level is 16, which will give you another 90%. Right here we have a gap to fill, so you can expect this stock to go up there and fill that gap all the way up there. If you're buying stock, you just buy, sit and wait, guys. You buy it right somewhere in the bottom there, you sit and wait. This is your first target, you take some profit, gets up, closes the gap up there in another week or two, you close that out. We're talking about 30, let's check that again. We're talking about 36%, and we're talking about almost 90% return on your money. So these are ridiculous plays, guys. And the last one, last but not least, is NanoX Imaging. So this is a pretty good company, as has some FDA approval as well. As you can see here, FDA approval was back in April. The stock sold off on great news, by the way. Now it has consolidated, and investors are accumulating this one right now. You see this type of action here, guys? This is accumulation that's going on. So watch out for a big explosion in this one. And you can expect moves of all the way to about 115% in the next 2 to 3 weeks on this one. A more conservative approach would go for a target of about 60%, right at that $45 level. So this one I'll be going after it in 2 batches. One for that 60%, and then the other one will be for that 100% on stocks. I'll do a combination of stocks and options trading this one. And the trade for this one has to be taken today, Friday 25th, because as you can see here, the wedge formation, it's already breaking out of the wedge right now as we speak. So you don't have time to wait on this one. The entry has to be today. Otherwise, you wake up Monday morning and this one is on fire, ripping higher, and it's just too late. You'll be chasing if you try to get into that after the fact. Let's look back at the history of this one to see when it breaks out of wedge formations. What are the returns? This one is 86% in 11 days, the last time it broke out of a wedge. This one was 80% in 2, 4, 6 days after it broke out of wedge formation. This wedge formation is even bigger than those two that I just showed you there. This one is 80%. The stock is down 80%, guys, in 148 days. So this one will be massive. We're down 70% in 148 days. So the recovery here, it's oversold. The recovery will be massive as this one springs higher. And NOX, let's see the short information on this stock. So this stock has a 20% short float, which is pretty high. Those anything over 18% will can experience short squeeze, like I mentioned before, what happened with GME and AMC over the past few months. It's still happening with AMC right now, and this one is a low float. We have 34 million shares float, So this one can be a big runner. This company isn't making money as yet, but that doesn't matter. It has FDA stuff in the pipelines. They got some approval, like I mentioned before, recently. So you can expect a massive move in this stock. So, like I said, you guys are, being given a treat here right now because I'm putting this information out there for free. Not many YouTube channels are, giving you guys this type of great content before the stock actually breaks out, not after, not hindsight BS. This is before the stock makes a move. Now let's talk about the risk for this one, guys. Your risk has to be this support line right here. Now, the way I trade is I get in at the support level. So the stock takes a turn, for the bottom, I get out for minimum loss. But some people, they gotta wait till it break out, and then they're entering when the stock breaks out, and then their risk is massive. They have like a 30% risk if the stock, reverses on them. Or if it pulls back, they get nervous and they get out, and then the stock continues to go higher. So no, that's not the way to trade it. The way to trade is identify the key support levels, enter on the key support level. Your risk, very small, where your reward is way above you for the stock to run. And you're comfortable because as it moves, if it pulls back, you're still in the profit. And that way you can give the stock ability to breathe, up, down, up, down. That's how stock moves anyway, but you won't be scared to jump out of your position. So that's it for this video, guys. We talk about Tesla, we talk about Romeo, FCell, NanoX Imaging. These are all top stocks that you can that I'm looking to take trades in starting today and early next week. So that's a wrap for this one, guys. If I earn your thumbs up, please smash that like button, guys. If you're new to the channel, please subscribe. That's all I ask in return for these great videos that I'm putting out. And I hope I've added value to your trading journey. And good luck and stay safe, guys.